Welcome to the Efficient Quarterly Review. We're joined today by Sifiso from Efficient Private Clients. Sifiso, getting straight to the content, what were the overarching themes that characterized the global markets during the previous quarter?
Yeah, if I could pick three overarching themes, I think the first would be the global markets, or more particularly the US market, reverting back to what I would say in inverted commas is normal. So, for example, we saw now the jobs data that came in weaker than what was actually expected. In line with a weaker inflation, the job data was actually interpreted as bad news. So I think it was for the first time in a while where bad news was actually bad news rather than bad news being good news. Jobs data being good news for inflation purposes.
Yes.
I think the second point that I would kind of think was an overarching theme as well would be the broadening of the market. I mean, if you look at the July performance, you saw some of the Magnificent Seven stocks really struggling, but you saw stuff like the Russell 2000, which is an index that tracks the small stocks, small cap stocks, really outperforming in July, rallying about 10%. And you also saw the broader market really performing, like stuff like the utility sector and as well as the stocks in the industrial sector with names like 3M, I mean, really shooting the lights out for the quarter, rallying about 30% in that quarter.
Okay.
I think the final theme that I would actually say was an overarching theme is the general dollar weakness. We saw the dollar weakening against all G7 currencies. Really supporting, returns for a dollar-based investor. I mean, for example, the Nikkei would have, if you were invested in the Nikkei, you would have experienced a decline of about -4%. But in dollar terms, because of the dollar weakening against the yen, you would have received 7% in dollar terms, positive 7%.
Yes.
Because of the 11% weakness of the dollar against the yen. I think the dollar was quite critical in the quarter, supporting, stuff like commodities and also supporting emerging markets as well.
Okay. Could you elaborate on the primary factors contributing to the performance of domestic market within emerging economies?
Yeah, I think the domestic market, like the JSE all shared, the primary, there were two factors. I mean, the first one was primarily the local elections. I think that the local elections went quite well. We saw the African National Congress losing, the outright majority in the country following the elections. I think that really shifted sentiment and favored a lot of our local assets, which are attractively priced in terms of the valuation. We saw our bonds rallying in the quarter. I think we also saw some positive policy moves with the Government of National Unity, being announced, as well as the consolidation of the energy sector and the electricity sector into the electricity ministry. I think the market really saw that as a positive for policy moves. I think, we also saw a lot of foreign interest back into our local assets. We saw our banks being bought up. In September, we also saw foreign interest in stocks like Old Mutual and stocks like First Rand. Standard Bank as well was one of the big favorites for foreign capital. I think the final thing that I would say in the latter part of the quarter rather was the Chinese stimulus that really helped push up the commodity sector because of China being such a large consumer of commodities. We saw our commodity sector, lifting with that Chinese stimulus news. We do know that the significance of China for the local markets. I mean, if you look at the resource sector in Naspers contributing to making up about half of our local market. So it is, I think, the Chinese part of the Chinese coming in with the stimulus really provided an additional tailwind following the local elections as well.
Okay. And then can I ask you to provide your outlook for the fourth quarter of 2024, maybe including some potential challenges or uncertainties?
Yeah, so the fourth quarter is, in my opinion, going to be quite a volatile quarter. I think if I had to speak to some of the uncertainties, for example, we came into the quarter with an inflation print, for example, in the US, which was the lowest since 2020, since March 21, the print that we saw in July, for example. It kind of, we agreed that, or consensus was that the fight against inflation was being won. Okay. The US was winning the fight against inflation, rather. We're also seeing the escalation in the Middle East with now, Iran potentially getting involved in the war between Israel. So that's pushing up energy prices as well. So I think those are two key factors that could play out very negatively for inflation. I think if you move a bit and look at the European story, I think there's also quite a few areas that are potentially challenging there, especially in the European auto sector. We saw recently Stellantis cutting their guidance, citing competition from China as well on their autos exports. I think one of the key challenges there in Europe is that China is one of their biggest autos markets. So it's going to be a very difficult one to navigate, whether to set up tariffs and potentially trigger retaliation from one of your largest trading partners. So I think in Europe there will be a lot of friction between China and Europe potentially, because they should, or realistically there is a case for setting up barriers to try and protect their own industry. And then I think in Europe as well, France, they have a difficult task of now trying to manage their budget in line with the EU rules. So they should be going into a fiscal consolidation, but now with the snap election that led to a hung parliament, there's concerns on how they're going to be able to navigate that. And investors have expressed their concerns with now the yield between the German 10-year and the China and the French 10-year bond, rising to about 8 basis points. The spread between the two yields, which is a record high that hasn't been seen in over a decade. And the French efforts to now try and curb and bring the budgets in line, they have now suggested a temporary corporate tax increase of about 8%. We saw the CAC dropping about 2% on the last day of the quarter. So I think there's a lot of policy related issues that I think will bring about a lot of volatility moving into the fourth quarter and into the first quarter of 2025.
Okay, perfect. Thank you so much for your insight. Until next time.
Thank you.